I have a corporate background. After my studies, I got a corporate job for like a couple of years, and I realized the corporate world is not for me because I was a slave of my desk. The reason why I went into trading was not necessarily the money, but more about the time freedom.
He walked away from the safety of a predictable corporate career and stepped straight into one of the riskiest games in the world. Bernd Skorupinski didn't gamble his future, he rebuilt it.
When I started trading 13 years ago, I put a lot of effort in my trading education. I would always tell people, look for something that fits your lifestyle. Day trading is literally like a 9-to-5 job. So the question is, hey, can you fit another 9-to-5 job into your life? The answer is no. That's why swing trading, midterm to longer term trades is way more sustainable.
With discipline, precision, and pure price action mastery, he became a trader known for consistency, transparency, and real results. Today, he leads Online Trading Campus, teaching thousands to trade with structure instead of hope.
I consider trading as the best side hustle in the world, and not in full-time job. People should have multiple income streams, and they should keep their job as long as possible. The end game of trading is once you get detached from money. Trading is literally a process game. If you follow the process right every single time, the end result is money. There's no overnight success. It looks easy, but it's definitely not easy.
So Bernd, you make your living trading the markets, but your advice is spend less time looking at charts. So what are successful traders doing instead?
Well, usually successful traders are not necessarily day traders. That's more like, I would say, a social media phenomenon, because on social media, everyone is promoting day trading. I have a corporate background. So right after my studies, I got a corporate job for like a couple of years. And then I realized the corporate world is not for me because I was a slave of my desk, basically, the 9-to-5 grind. I mean, for me, it was not a 9-to-5. For me, it was basically 7 to midnight, basically, almost no sleep at this time. So I wanted to have more time freedom, more time flexibility. So the reason why I went into trading was not necessarily the money, but more about the time freedom. So I, quote unquote, developed a strategy that I would consider or call set and forget and get alive, meaning you spend less time in front of the screen and you still make decent returns in the market. So when it comes to trading, we classify it as traders more like as swing trading, which is you spend time in trades for a couple of days or even weeks.
Why did day trading even become so popular? Because what you say makes a lot of sense. If you're going to replace your full-time 9-to-5 or whatever, 7-to-11, as some people are working very hard, if you replace it with the business or trading, or the whole goal in life is freedom. That's what everybody wants. Everybody wants some version of freedom. But then they end up making them creating a more complex job and a more time-consuming job, which doesn't make much sense to me at all, because I do know some people that are day traders. And it's even worse than entrepreneurs because they can't even go to like lunch without bringing their laptop with them. So where did this whole phenomenon of day trading and being quite literally a slave to your laptop and the markets down to the minute, where does that come from?
That's a very, I think, philosophical discussion because I'm also not sure, but I think it's about the perception of making quick money and the appeal of, hey, I can make money, a lot of money in seconds or even minutes. And this appeals to a lot of younger audience who maybe don't necessarily want to work hard for their money, but wants to have like the quick cash out, almost like, last week I was in Vegas for some podcasts. It's almost like making the analogy like going to the casino or having the slot machine mindset, quick money, not working hard for their money. Maybe that's why it's so popular in the social media world, especially for the younger audience, especially in particular for the younger audience, I would say.
I'm actually more curious because you've built yourself as a successful life and business doing things, I would say, the right way. did you go through periods of your life where you tried the day trading and the things that were sort of a little bit sold to you as like a quicker return?
No, actually, so I'm a full-time trader now since roughly 11 years, and I'm originally, you might hear that from my accent, I'm from Germany, but I moved to Dubai 2009 already. So since I live in Dubai since 16 years now, and when I started trading, and I started trading 13 years ago, I was starting, yes, with a little bit of day trading as well, because I had a little bit of time on my hands. And I always tell people, you can start with day trading if you have the time, because it gives you immediate feedback. You know, you get immediate results, and then you know basically, because you can create the more, basically, I'm trying to simplify it now for the audience a little bit. The quote unquote, the more trades you take, the more sample size you have, and the more you have more sample size, more results, and then you can tweak on your trading strategy. And obviously you have more sample size quicker with day trading because you have a higher frequency of trades versus with swing trading, because you have less frequency, you have less sample size, it takes longer to tweak your strategy in a general sense, right? So I went through a period because I had the time, I wanted a sample size. I put a lot of effort in my trading education back in the days. So I was doing a lot of day trading as well. And then I created a certain sample size to tweak my strategy. But then I used that strategy that I developed, kind of moved it into swing trading, longer term trading, and tweaked it there a little bit as well. So it was like a process, I would say, like anything else in business as well, like it's like entrepreneurship. But I always tell people, don't look for a specific, because trading we could classify in date. There's even something else that is even far, like scalping, high frequency trading, but we don't have to discuss that. I would never recommend this to anyone, right? So let's say there's day trading and there's swing trading. I would always tell people, look for something that fits your lifestyle, because, you know, people might be drawn towards day trading, the quote unquote quick money, but they have a full-time job, they have family, they have kids, they have hobbies, they have social obligations, they have life. Like, we all have lives, right? So it's basically, day trading is literally like a 9-to-5 job. So the question is, hey, can you fit another 9-to-5 job into your life? Most probably for the majority of people, the answer is no. So don't even go that route, right? So, and don't get disappointed. So that's why swing trading, or like the midterm to longer term trades, is way more sustainable for the mass audience.
How did you, so even walking through like sort of your life and you as an example, so for somebody who's listening to this, they're saying, oh, I want to quit my job and be a trader. How do you actually go through that process? Like, what did life look like? Set real expectations.
First of all, I would never ever recommend quit your job and become a trader. Never ever. I would say trading is I consider trading as the best side hustle in the world, right? And I emphasize on in side hustle, right? And not in full-time job. So people should have, especially in the beginning, multiple income streams. And they should keep their job as long as possible and use trading as a side income eventually. Obviously, it doesn't work from the beginning. You cannot make money from the beginning, right? We are real here in that podcast, right? You cannot make, there's a learning curve in trading, like with any other business in the world, because trading is a profession. People have to, like, once they get into trading, they have to shift their mindset from, hey, I'm starting profession, a real profession, a business. Like, I want to become a pilot, I want to become a lawyer, I want to become an engineer, I want to become a doctor, whatever it is. It's trading is a profession like any other profession. So they have to go with that mindset into that venture, because, hey, it takes some time to learn a profession. And there's some, like in life, it's like ups and downs, right? It takes, like, it's not a steady learning curve. It's ups and downs. So they have to approach it with that kind of mindset. And and then it's basically just takes time like anything else in life, right? And they have to have these realistic expectations as well.
Maybe actually it would be helpful, before we speak about too much, but maybe it's good to actually define some like different things when it comes to trading. So when somebody's first getting into the world of trading, what are the different options? Like, what are the different things they can actually think about? Because I guess where you start, which is safest, is just like the Warren Buffett version of investing, where you just at least you can start with like a Vanguard ETF or some sort of like fund, and then the next level would be like picking stocks, and the next level would be, I guess, then is the next level like swing trading, where there's actually some paying attention to the market as opposed to just setting and forgetting it for years. Like, what are the levels to this game?
Yeah, what is the levels? In general, I would always say the foundation is always learn about trading in general, about investing or trading.
Yeah.
Because, well, I would never, ever recommend for people to take some money and put it into any kind of market or financial investment when it comes to the markets without having any real skill or knowledge. And what I mean is like specialized skill and specialized knowledge about the markets. So you always need a foundation. Without foundation, the likelihood that you might lose all your money because you don't know what you don't know, right? And you're not skilled is very, very high. So regardless of where you start, whether you want to just pick some stocks or buy an ETF or really want to be more active in the market, you need the skill and you need the specialized knowledge. Otherwise, it's very likely it will backfire.
Well, I think we even saw this last week.
Even saw this last week, yes.
I saw a lot of crypto people getting wiped out because of their leverage on...
And that's the problem, right? And that's why trading, and it's funny because I said that yesterday in a podcast as well. That's why trading has such a bad rep, because people think trading is super risky because they hear these horror stories. Last Friday, the market was super volatile, especially in crypto, and people, because they're in crypto leverage, they lose all their money and stuff. But you know what? Because and that's the problem. The market is the market is accessible for everyone. And since the market is accessible for everyone, and it takes you 60 minutes to open up a brokerage account, you use your debit Visa card to deposit some money, and then you place a trade. You don't know shit.
Yeah, I know.
You don't know shit, but you consider yourself a trader because you have placed a trade, right? But is this really the definition of a trader? Because, right, you have definition of engineers, definition of lawyers, definition of doctors, definition of whatever, of any profession. But when it comes to trading, the problem is that in trading, there's no real accreditation system. There's no real certification system. Everybody can go out and sound smart about trading and talk about trading, and people are less smart and think, oh, this person sounds really like articulate, so let's follow this guy, and he could be full of shit, right?
Yeah.
And that's the problem when it comes to the markets, because when you do it professionally, trading, I would say it's less risky than any other profession in the world. Why? Because if you do it professionally, you can always determine your risk. You can always determine what you want to risk per trade. If I say now on this particular trade, regardless, by the way, whether it's a leveraged market, non-leveraged market, this doesn't make any difference on any trade that I take, leveraged or non-leveraged. I, as a trader, professional trader, determine how much money I want to risk per trade. Whether it's like $5, $500, 50 million, anything in between. That's the maximum amount I can lose. I determine that amount for every single trade, and a professional trader does that. And if you don't do that, you're not a professional, as simple as it gets.
Well, no. So when I was sort of researching like who you are as a person and going down the rabbit hole, I didn't realize how bad this industry was. Like I mentioned before, I kind of see some people because I see them on Instagram and they talk about trading and whatnot, but it's not like my main thing. So I don't know it super well. I know investing because I invest myself, but I don't teach it. I just pay attention. And I actually love what you said, how if you are going to be like successful as an investor, you have to learn one thing better than anything else. So whether or not it's like, it could be real estate, it could be crypto, it could be stocks, if you know one thing better than anything else, there's a better chance you're going to be successful at that thing. Yeah. So I love that you said that, but I didn't realize how bad trading was. So I didn't realize that this industry is bad, notorious for fake screenshots, like unverifiable claims, people that are hiding their results. And then I understood how you operate. And I don't even know what this really means, but this 120 documented FTMO leaderboard entries and all these other sort of signals and proof points that you do what you say you do. So maybe give people who aren't aware of what the trading world is like, what some of the reality is, as unfortunate as it is. So they're like, sort of like, they have a little bit more caution when they follow people. And then also speak about how you operate so that they can understand like what a legitimate professional trader does and what they should look for, if even if they don't follow you, what just to make them aware.
Yeah, well, we could go down that rabbit hole. It's like you don't even want to know how shady that business is, but you kind of also you stated it already in a way that there's a lot of people fake screenshots, they fake trading statements, because there is no, as I said, there's no real accreditation system behind. Like there is in general no third party that verifies you as a trader, like as an kind of overarching authority in a way that, hey, he can classify himself as a trader, and then that's why he can teach other people, or that's why he can make comments about the markets or give like trade ideas or financial advice. Doesn't necessarily exist in the trading world. And that's why I would say bad people trying to take advantage of that. So, but I would like to speak more about how I operate, and that I also realized that there is a lack of transparency when it comes to trading and trading education, and who is quote unquote allowed to speak about trading and not. So I ventured into prop trading beginning of 2022. Mid of 2022.
Explain what that is.
Exactly. I want to. So, of course, I explain that because people on this channel obviously might not know what prop trading is. Prop trading stands for proprietary trading. So these are proprietary trading firms who can fund you as a trader with capital. Meaning, the biggest obstacle that people usually have when it comes to the trading space, is lack of capital, right? Because even if I have $10,000 in my trading account, and for a trader, to make 1 to 5% a month is like realistic, reasonable, like 1 to 5%. So if I make 1% on a $10,000 account per month, it's like $100. Yeah. It's not necessarily life-changing.
It's not a lot.
It's not a lot. So you need a lot of capital to make decent return, because we have to talk about realistic returns is to 1 to 5%. So now, because of in recent days, we have AI, we have machine learning, we have technology being way more advanced than back in the days, there's something called proprietary trading firms that can fund you as a trader. And they fund you $200,000, $300,000, $400,000. You can scale with multiple prop firms. They can fund you up to $1 million. And you can trade with their money. So they just, obviously, usually how it works, they don't just, here, they give you the money, here, take it and trade. No, it's like almost like a driver's license that you have to pass some tests beforehand. It's like you trade the markets, and if you can achieve certain percentage gains in like a certain period of time, then you're qualified to become a funded trader, to get the funds. So you have to pass these tests. They call it evaluations, and if you pass these trading evaluations, you can get funded X amount of dollars. Now, if you get funded $400,000, for instance, now 1% a month makes a big difference.
Much more than your 10,000.
Exactly.
Yes.
It's not a $4,000. And $4,000, and by the way, 1% a month is more than realistic if you're like a skilled trader. Only 1%, right? And then if you make like $4,000, $5,000, $6,000 a month with a funded account, well, makes a big difference for the general person, right?
But does some of that money not have to go back to the...
And let me, exactly. I wanted to, perfect that you ask, because now people might think, oh, I'm trading so much money. What if I lose money? Now, obviously, you cannot lose everything, but whatever you lose, you don't have to cover it. You don't have to pay for it because the firm is covering it. All right. So you cannot lose any of your own capital. And if you gain money, if you make like, let's assume you make 1%, which is on a $400,000 account, is $4,000. Usually the profit split is between 80-20. So 80% goes to the trader and 20% goes to the firm, usually, right? So then it's basically 20% of $4,000. What is it? It's $800. So $3,200 goes into my pocket and $800 goes into the firm's pocket.
I understood.
So when it comes to prop trading, there's literally no downside. So usually I would say, hey, what sounds too good to be true is too good to be true, right? So, but when it comes to prop trading is really a game changer. However, as I said, well, when it comes to prop trading, you still need one thing, and this is skill.
Yes.
And this is skill. Otherwise, it's like it doesn't help you in any way, shape.
Well, no, because no firm would ever lend money to somebody who's unskilled because it's a huge liability.
No, because you have to make the test. No, usually the test in
Yes,
advance, right?
Exactly.
So you have to test, and that test you can repeat as many times as you want. But you will never pass the test, and you will never get to a real payout if you're not a skilled trader. So you still need to learn the skill how to trade. But when it comes to the obstacle of, hey, I don't have money, that obstacle doesn't exist nowadays anymore, because you have the prop firms who can fund you if you're a skilled trader. So you as a trader nowadays, your primary goal is to look to become skilled as a trader, and then you can utilize prop firms to kind of leverage capital and scale your capital and go from there, which is amazing. That's why, I also want to say I'm not affiliated to any prop firms whatsoever. I was never affiliated to anything else. I'm having my own business and stuff. But I feel like I'm a prop trading ambassador because it also changed my life. Because when I started, I didn't know anything about prop trading. Even I was like, in 2022, when people first showed me, hey, look at these websites, these are prop firms, I was like, I'm not sure, this sounds so sketchy, how can this be real?
Well, I think the way that I think about it is, if you're, for example, just to draw a parallel, if you're going into real estate, there's investors that have money, but they're not looking for real estate deals all day. They have people who invest in real estate for them. So if you're good at investing and turning a profit and generating a return on real estate, they have capital they give you. I assume it's a very similar mentality with these prop firms. They're looking for skilled people that can get some sort of return.
Exactly.
And this is where the money, there's lots of money in this world.
But yeah, lots of, yeah.
But I think that's where, I mean, if you have the skill set, then you can take somebody's money, you be a steward of that person's money, and you generate a return for them.
Like that, exactly. So then I went into prop trading 2022, and back in the days I had already, a lot of years of experience. So for me to pass these tests was pretty easy. These trades. And then I got funded. I got funded first $200,000, and then I got funded $400,000. At some point in time, I was funded $4.2 million, even with all these prop firms together scaling. But, talking about your initial question, the FTMO is the biggest prop firm in the world. Then, Then once I was funded, I received monthly payout after payout. And, they have these leaderboards where the best traders show up with the best returns on a daily, weekly, monthly base. So after like 1.5 years, then in the beginning of 2024, I was awarded as the all-time record holder for FTMO with 120 leaderboard appearances. And in total, until beginning of 2025, $275,000 of payout based on that $400,000 account.
That's amazing. And what makes you better? what makes you able to, like, is it the mindset? Is it the strategy? I mean, obviously the skill is the obvious answer.
It's the obvious answer and the simple answer. There are nuances to everything, obviously, but I would say it's just my skill that I've developed over the years. And usually in this business, there are a lot of young people, and they just don't have the experience and the skill that I have just yet. And that's why I just said I went into prop trading in 2022, and I had already close to, I don't know, 7-8 years of full-time trading experience. So for me it was like, okay, I was already Formula One driver, metaphorically speaking. So I was just sitting into another car and driving it, safely. Yeah. Whereas when somebody's new to that or has like little experience getting into a Formula One car, they're gonna crash the car continuously,
Do you think that there is, if you were going to boil down your experience outside of just putting in the reps, is there something that a successful trader, the way they think or the way they operate?
Yes. I always like to say the end game of trading is once you get detached from money. You get detached from the money, because trading is literally a process game. You follow a process, a certain process that is objective and that is repeatable. And that process you follow for each and every trade. It's a repeatable process. It's quite boring, to be honest. It has to be boring. And the result is the money. So if you follow the process right every single time, the end result of following the process correctly is money. So money can never be in front of the entire equation. Money is always at the end of the equation. The process comes first. So I felt like once I slowly got, and in the beginning, and I get it, we are all also in for the money. It's part of the game. Trading is to make money. But once you, in the beginning, when you're very money-centered, very money-focused, you're chasing the money, and then you're making also bad decisions usually, because you're acting emotionally based on fear or greed or whatever. But once you establish like really a trading strategy, it's called a trading strategy, which is then basically following that process. That process is your trading strategy that you have written down in your trading/business plan, because you're running a business in this case. So you have to have, and then again, I'm asking people, hey, you're a trader, so do you have a trading plan, meaning /business plan? And they're like,
but all the best ones would.
All the best ones would have, exactly, because this is where you write down nitty gritty your trading plan, your rules, basically, to follow your process.
When you work with like these prop firms, before you even get, so say for somebody who's starting out with trading, so you focus on swing trading. You obviously have your trading strategy. This trading strategy yields X% per month in returns. And you've passed all the tests. Now you have the prop money. If somebody's just getting started, they want to get to where you are, which is obviously 11, 12, 13 years of experience, but they want to get to where you are in the quickest way possible. So do you recommend a certain kind of asset that you invest in? Do you recommend swing trading as sort of like the least stressful form of trading? Like, what are sort of like the main things that they should focus on out of the gate so that they don't maybe waste as much time getting to where you got to?
Yeah, that's usually a difficult question, because these days it's, you have to imagine when I started off like 13 years ago, the world looked different, especially this.
Yes.
Especially when it comes to the online social media trading space. I call it, there was much less noise. These days it's so hard, right? I mean, if you just type into Google learning how to trade, or how to learn, how to trade, the amount of information you get, it's like information overload. So it's really difficult for people to, I don't want to get started these days. I'm glad that I'm like already done with that. But that's why there's no real answer to that. What I tell people is, don't focus on one asset. Like I consider myself a multi-asset trader, trading Forex, futures, and stocks, so everything. So there's something like called the power of correlated markets, right? You have multi-asset correlations, stocks, impact, equity indices impact crypto, and you have like currencies, the dollar impacting all the other currency. It's all kind of correlated in a way.
So you see these patterns across all these different assets.
Yeah,
quite,
100%.
Quite predictable.
Yeah. It's very predictable on a longer term horizon. So that's why I would not focus necessarily on specific asset classes, but on more like learning the skill, meaning the strategy. And the strategy should be applicable on all asset classes. It should not be a strategy that, because these days you see on social media, hey, this strategy is only applicable on one single market, which is then usually, for me, it's already a red flag. Because if you have a strategy, that strategy should work on just any chart, on any market that you look at, so you can objectively analyze the market. You should even like, okay, I don't even know, I just see the chart. I don't even know what market that is. Could be Bitcoin, could be the Dow Jones, could be Euro, but you can objectively analyze the market and anticipate with a very high probability what is about to happen next in the near future.
Without even knowing what
market it is, exactly. Without even knowing what asset it is. And that should be your strategy should be capable of doing exactly that. So make sure you learn the right strategy, and everything else is then just coming on top, right? But the foundation, it's like a house of cards, right? Your foundation is basically your strategy. You're building your skill, and that should be like correct. Everything else is, if you build on a faulty strategy, on a faulty, base, then it just needs that it will fall apart.
Is there any other benefit outside of capital? So truly unlimited upside. If you know what you're doing and you have the skill set, there's limited downside because the firm covers the downside. If
just
there's
pay
a loss.
for the tests.
Understood. Is there benefit outside of capital that working? Because again, like I would actually ask, like, is there a certain point when if you do make enough money, does it actually make sense for you to keep borrowing from a prop firm for capital, or does it make sense for you to just like go it on your own?
No, I mean, you can do both in parallel as well, right? And you scale even more. It's all about scaling capital at the end of the day. But, for me because I consider myself also an educator, online educator, I'm in the social media space, educating people. For me, it was actually, when I went into prop trading, it was not about the money. It was more about, hey, there you get like third-party verified results. So you get literally, and if you go on my social media, you see these payout certificates, in this case FTMO payout certificates, where you have a QR code on it. You can scan it on the phone, and then you get led on another website from FTMO and see if this
is it real?
If it's real. So then it's third-party verified. So for me, it was always like, as an educator, as we established in the beginning, there's no real certification, accreditation system, overarching, system that can verify that you're a trader or not. You need to, if you're like an ethical person, you need to find ways to verify yourself. So I saw this kind of, wow, cool, I get these payout certificates every other month. And they have like these QR codes. They are third-party verified by this company. So this verifies me as a real trader, because I can literally, I'm like, quote unquote, the needle in the haystack, because I can have these certifications that others don't. So for me, it's like, okay, this is like my proof, my way to show transparent results in a way, to have like, okay, look, I have that. Hardly anybody has that as well. So,
it sets you apart.
It sets me apart.
Is that really how bad the industry is? It's so few people are legitimate.
It's even worse. But I don't want to scare the people here, because obviously there's also...
No, but you're giving people ways to verify.
Yeah. You're giving... Exactly. And that's so good. So don't just trust any kind of, hey, because what people do, they take their mobile, they show it into the camera, look how much money I made. This is like, the young audience on social media, look how much money I made today. I buy this new car now and stuff. Don't believe in this kind of nonsense, right? Find traders who have some verified documents, results, maybe from prop firms or third-party companies, whatever it is, but find something that is legit and don't follow just like some simple screenshots.
Quick question. What's your go-to when you got 10 minutes before a meeting or a workout? For me, it just used to be whatever I could grab, which usually meant skipping meals entirely or just grabbing something that left me crashing an hour later because it was just full of garbage. That's why I'm partnering with Huel. This black edition, ready to drink, is a complete meal. So it has 35 grams of protein, 6 grams of fiber, 35 essential vitamins and minerals. It is no sugar added, gluten-free, under $5. I always keep a few of these in my fridge. And honestly, it solved the whole back-to-back meetings, go, nonstop, no time to eat problem super well. And this one's new for me. It's Huel's Daily Greens. I had the blueberry this morning. Honestly, first impression, it was way better than I expected. It's developed by registered nutritionists and dietitians. There are 42 vitamins, minerals, and superfoods, only 25 calories, 4 grams of fiber, and just 1 gram of sugar. I throw one back first thing before my morning calls every single morning. Look, if you're running a business, time is the most valuable asset. Huel makes healthy eating simple, and they also just launched into Target stores nationwide, so you can get it everywhere. Try both products today with 15% off your purchase for new customers with my exclusive code SCOTT at Huel.com/Scott. Try both products today with 15% off your purchase for new customers with my exclusive code SCOTT. SCOTT at Huel.com/Scott. Use my code, fill out the post-checkout survey to help support the show. That is Huel.com/Scott. They really make healthy living taste amazing. Even if you're on the go, healthy eating, healthy lifestyle, doesn't have to taste bad. It doesn't have to suck. NetSuite is a success story partner. Now, what does the future hold for business? If you ask 9 experts, you'll get 10 answers. Bull market, bear market, rates are up, rates are down. At the end of the day, it'd just be easier if somebody invented a crystal ball. But until then, over 43,000 businesses have future-proofed themselves with NetSuite by Oracle, the #1 AI cloud ERP that brings accounting, financial management, inventory, and HR into one unified platform. Here's what I love about it. Instead of juggling multiple systems, you get one source of truth, real-time insights and forecasting that actually let you peer into the future with actionable data. When you're closing your books in days instead of weeks, you're spending less time looking backwards and more time focusing on what's next. Whether your company is earning millions or hundreds of millions, NetSuite helps you tackle immediate challenges while seizing your biggest opportunities. If I needed this product in my business, this is what I'd use. It's a game changer for business visibility and control. If you want to see how AI can transform your financial operations, download the CFO's Guide to AI and Machine Learning for free. That's netsuite.com/Scott Clary. That's netsuite.com/Scott Clary. netsuite.com/Scott Clary. Swing trading. So explain what this is. Like, what's the time horizon that you play with?
So I'm trying to do this to explain it as simple as possible. We already established that trading is being categorized in scalping, which I would never recommend. It's like high frequency trading. You have day trading where you execute on also quote unquote smaller time frames where you look at 5-minute charts, 10-minute charts, 15-minute charts, where you execute in a minute, in that minute, and trades last maybe for maximum 60 minutes, maybe between 5 minutes to 60 minutes, so very short period, so very short time horizon, like within the day. You literally close your trades on the same day, right? And then you have swing trading, where I, for myself, but I'm now a professional trader, I analyze the markets during the weekend. The markets are closed. And then I make my setups, my trade watch list, so to speak, the markets that I'm interested to trade. And then when the week starts, whether it's Monday, Tuesday, I can place these trades in advance. So the market is basically, so when I want to, let's assume like I'm trading equity indices, or let's assume I'm trading stocks, Apple. So I'm highlighting an area where it's like, oh, if price comes down here, I want to buy Apple. But only if price comes down here, I want to buy at a quote unquote discounted price for me, right? If price never comes down here, I never going to buy Apple. But if price comes down here to that certain area where I define, hey, this is a discounted price, so to speak, I want to buy Apple, right? So I can set these trades in advance. Right, that's why I call it set and forget and get alive. So you set these levels in advance, these trades in advance, and then you see if the market's going to play out or not.
And if it doesn't, and it doesn't move in that direction, then you don't lose anything.
I don't lose anything. And even if I lose something, because you have, as a professional trader, every trade consists of 3 elements. You have an entry point, where you enter the market, a stop loss, which is your safety net. And this is when I say trading is always calculated risk, is less risky than any other business, because the difference between, so the gap between entry and stop loss, this is your risk.
Yes.
So, and you define that risk. You define how much risk you're going to take. Am I going to take $1,000 risk on this trade? Am I going to take $5,000 risk on this trade? Am I take $50 risk on this trade, right? Any number you define. So if it hits your stop loss, if you were proven wrong, because trading is about also being wrong, right? Then it hits your stop loss, but you predetermined the amount you're gonna lose. Then you move on and you move to the next trade. And the third element of a trade is your target. So if it goes into a discounted price, if you buy it and you were right, it goes into your target, you make X amount of profit, right? We call this, again, we could go deep into this rabbit hole, risk to reward proposition. You always try to make, for every dollar you risk, you try to make $2. So you have a 1 to 2 risk to reward proposition in trading.
And if you do this, this is a weekly where you look at the markets. How many bets are you making? So like how many ideas do you have?
Yeah, so yeah, exactly. And this depends on the market. And then again, you then you place your trades, and then you really throughout the week, you basically need, again, as a professional, if you're already skilled.
Yes.
Right?
Yes,
we talk about me as a skilled trader.
And you know what you're looking for.
Exactly.
And you understand
so
trends.
It takes me then, during the day, 15 to 30 minutes maximum. I don't even say an hour, because it never takes me an hour on a daily basis to kind of follow up with my trades, look at the market, what's happening, and that's it. Right?
It's not a lot of time.
And that's why it's exactly so with this kind of trading approach as a professional, right? Obviously, again, if you're new to it, you need much more screen time. You need to learn, right? Nobody can take away the screen time. We talk about me as a professional. It takes literally no time at all during the week to do like sit in front of the screen and really actively trade. It's basically just following up, right? And this is what I also firmly believe in, because this gives you so much time freedom and flexibility.
Yeah, that's amazing.
And sometimes people criticize. They say, yeah, but you barely have any trades. But when you say like a day trader who trades maybe takes 5 to 10 trades a day versus me who takes 1 or 2 trades a week, and then people have that preconceived notion about higher frequency of trades equals more money, right? More trades makes more money. That's what people might think, but it's actually the opposite. More trades usually because you take lower quality of trades, you make more human mistakes. You actually, usually what I've seen based on my experience, more trades results in losing more money, actually in the opposite. Because also here, when it comes to trading, the only variable that people also usually don't understand, the only variable that is important is scaling capital. That's why also when it comes to trading is one of the only business in the world where if you want to make more money, you don't have to invest more of your own time, because the only variable is scaling capital. You have to imagine the strategy, the foundation, the way how I execute is always the same. The only thing that changes is my capital.
So it's leverage.
It's the leverage, exactly, right? So that's why that's why I consider trading the best side hustle in the world, because it never requires more time to make more money. It only requires what? More capital. And you can get more capital through prop firms these days.
People seem to, they just rush.
They rush, but this is the mentality these days.
Yeah. They just rush. Because there's so many different shiny objects that people on social media dangle in front of them. And I think they just get overwhelmed and they try everything. They lose money. Oh, it's not for me.
Yeah. Like, and they blame everything but themselves. That's a problem. Yes. They're not self-accountable.
Yeah, that's a big problem. It's a huge problem. There's so many words associated with trading. So there's futures, there's using leverage, like not financial leverage, but there's using like leverage on the money that you have. There's options. Simplify it. What are all these different things? There's futures. Like, what are all these different things that people are trading? Is this stuff that's just more confusing than anything? Like, is there something that you just focus on to start? Because all these different like asset classes, but then there's different ways to look at every single asset class. And I think, again, for the average person, it just gets very overwhelming.
Yeah, it's very overwhelming. I mean, when I started trading stocks first for one.
Stocks are easy. It makes sense.
Okay.
Yeah.
So
very easy.
Very easy, so, right? And then I was introduced to futures. And when I was introduced to futures, all of a sudden so you can trade these markets, right? You can trade leveraged markets now. I was then realizing, wow, why did I ever trade stocks? because this is so much more efficient to trade. I need less capital and I can make the same amount of gains. And again, we talk about calculated risk. So the risk doesn't make any difference whether I trade non-leveraged market or leveraged market. You as a trader should always in advance how much money you risk on a particular trade. I hope we established this by now for the audience. So really, leverage is not a deal breaker at all. Leverage is actually helpful because leverage can help you, trade with less money and make the same returns. So leverage should be your friend, not your enemy, if you do it right. So then I was introduced to futures, and then in the futures market you can trade all these markets like equity indices, right? Dow Jones, Nasdaq, S&P, Russell. You can trade commodities, precious metals, gold, silver, and so on and so forth. And you can trade agricultural products, corn, soybeans, wheat. Like it's crazy. And you can trade currencies as well: the euro dollar, the dollar index, the Mexican peso, whatever. You can trade literally all the markets in the world with futures. So then I was like, okay, why did I ever trade at stocks if I can trade futures, right? So then I was trading my whole life futures. So I consider myself actually a futures trader. But then I because prop trading is very popular in the FX space, in the Forex space. Forex in general has a bad rep because it's unregulated and usually a lot of scams happen in the Forex market. But the problem is that it's not the market, it's not the market's fault, it's the people's fault all the time. So don't blame FX. FX is not the black sheep
FX
here.
is just a market.
It's just an asset class, exactly. Like nobody says stocks are scam, right? Well, they might be even quote unquote more scam because they can be manipulated by a single individual because the volume is not so high then,
as opposed to like a currency.
Exactly. Not a single person can manipulate it, but we have seen that stocks can be manipulated by single people, so powerful people. So don't blame the market as scammy, blame the people behind who like offering certain products. So it's just another asset class. So and then obviously I went into, because FX. And by the way, FX is not necessarily only Forex. You can also trade equity indices in the FX space. You can trade even stocks in the FX space. You can trade all the markets that are inside the stock market, inside the futures market, in the FX space. FX it's just the umbrella for, then you have derivative market.
And can prop trading be applied to, actually also help me understand the thing. What's the difference between leverage and prop trading? Because there's a difference.
Well, no, because prop trading is, so usually prop trading, you have futures prop trading, you have FX prop trading.
So prop trading can apply to anything.
Prop trading can apply to anything, even to, there's even like prop trading firms that offer it's just for stocks trading, right? So prop trading is just the umbrella, and then you just put the asset below. And then you do like futures prop trading, FX prop trading, stocks prop trading. But the concept is usually similar or the same. And usually all these are leveraged markets then as well.
All leveraged markets. So when there's news headlines like people in crypto get wiped out because they're over leveraged, what did they do wrong?
They bet their house on it.
So they said, I want leverage. Because I've only really learned about this in the past week, and it's like I want 5x, 10x, 20x, 100x leverage. So I've learned that you have your capital, and then you leverage your capital. But if it can go unlimited upside, but if it goes down too much.
So it's very simple. Like if in the FX space you have firms that you have a 1 to 100 leverage, right? Meaning you have $1,000, you buy like they call it one lot or one contract, depending on what asset class you're trading, and then you're controlling $100,000 of capital with like $1,000 of your own money, right? So you use that $1,000 of your own money as a deposit, and you can control $100,000 of capital. Now, and people play this game. Imagine you have a $50,000 account, and then you have 100x leverage. Like imagine how much you can control, and then people just risk too much money.
So they risk too much of their own money.
Exactly. So then it's very simple. Exactly. But then it's very easy because then they don't have proper risk management in place. They don't have these stop losses in place. They risk way too much money than they have in their own account as a deposit on a simple trade, because they hope in their mind, hey, I bet all that money. It just has to go a little bit into my direction, and I make like 2, 3, 4x on a single trade in a quick period of time. uneducated greed, wrong mind. It's everything.
Because leverage is then different than prop trading, because prop trading, you can't lose your principal, I'm assuming, if it goes down to a certain point. But
well,
like,
you can lose, then you will lose the account. You will lose the account,
yes.
right? If you so now if you use leverage with your own capital and you use leverage unresponsibly,
yes.
you basically can wipe out your account in seconds, minutes, days, and it's very likely that eventually, right? We call it the beginner's luck phenomenon. It's like, you're lucky once, you're lucky twice, you're lucky 3 times, but eventually it will bite you in the butt and you will, lose everything.
Like what happened with crypto.
Exactly. In prop trading, you use also the same principle, leverage, but you don't use your own capital. So the only thing that can happen is you're going to lose your account that you paid the test for, right? Yeah. But you don't lose anything from your own hard-earned capital.
When you, on the weekend, you're looking at what you're going to do for the week, what are you looking at that retail investors, maybe they miss? Like, are you looking at what Trump's saying? Are you looking at
no.
I don't know. I don't know, because this is what seems to move markets now. It's just the chaos, but you seem to find a way to be successful.
And that's, again, it's a very preconceived thought, and it's a myth as well, by the way. Like, because let's assume, because we established, or I tried to establish that we are following a process, yes. And the process has to be repeatable and objective. Yes. Now, if I look what Trump said, is that repeatable? Is that objective?
Not at all. Not at all.
Not at all, right? It's the exact opposite of what I'm trying to convey, what I'm trying to do with what I'm doing with my strategy. So I try, and I do this quite well. I don't know anything about what's I'm really like shutting down my doors, my ears. I'm not listening to any outside noise. I couldn't care less. I only try, and what I'm doing is what is in front of my screen, analyze what I can objectively analyze on that particular market. And again, I don't want to go too deep into this rabbit hole, because again, this might be overwhelming to people, especially for the people who have maybe never seen a chart or never really analyzed something. But I like to combine something that is I call it a 2-step mechanical process. I look at certain fundamentals to create a market bias, to be like whether I'm biased bullish or bearish. And once I'm like biased in a market fundamentally, I use technicals, so a chart itself, to time my market, to place my entry, stop loss, and my target.
Very smart. And this is like, listen, again, I'm probably one of these people that just invest casually. Yeah. But I still understand, because sometimes I live on Twitter and I see what people are talking about, and I still understand that people like look at how charts are trending and they try and sort of map out where it's going to go into the future. So there's validity to this. Yeah. And this is what you're looking at, as opposed to reading news, yeah, or listening to what Trump's saying, or wondering what's happening in Ukraine. Like, you are not paying attention to that.
I'm not paying attention at all to that. Not at all. I don't even sometimes know what's going on. I don't want to even know. Because it could, like, even subconsciously, maybe
it probably could. You're human.
I'm human, exactly. Influence, my decision making. So I'm trying to really. I'm never watching news. Don't look at headlines. I'm trying to, at least, and just do my thing, because it's proven to work, right? And I'm trying to convey this message, because people sometimes say, yeah, the market is moving now because he said that, he tweeted that, and because this and that is happening. No, the market is moving for way other reasons, because not somebody tweeted, because there's other factors why a market is moving, and not because a random guy, okay, not random, but because a guy is tweeting something. This is nonsense.
When you look at the biggest misconceptions, you mentioned this is one of them, but other big misconceptions that people have about trading?
There are very basic misconceptions, like you need to be you need to be the smartest guy in the room to make it in trading. I might sound too complicated for a lot of people who are watching as well, but I always say I'm not the smartest guy in the room. Never ever. Like, I was less than average in school and university, and I barely made it. So I'm not the smartest guy in the room. Trading is a skill and can be, in theory, learned by everybody if you do it the right way. So it's a skill. Then also, when it comes to trading, you don't need like what you see in movies and on social media, that people have like these walls full of screen, and wow, it's like overwhelming. Like one single laptop is more than enough. You don't need any kind of advanced software. Everything these days is browser based. So when it comes to, people are sometimes afraid, wow, because of technology, they might be not too advanced. They're older generation. That's why they're like maybe hesitant to get started.
You do see some pretty ridiculous things on YouTube and Instagram with like the 5 different screens.
Even I have that, but even I have that, in my, maybe you've seen it in my YouTube videos in the background, but it's not, it's really just for, I love tech, and it's just for show off purpose, on.
It makes the video look good.
It makes the video look good, but I don't need it to be a better trader.
That's real. That's real.
I'm saying that, I can say that. So that's one. And then, sometimes people don't understand, also, if you're really completely new to the markets, that when it comes to professional trading, that trading is also great because it's recession proof, because you can make money on both sides, upside and downside, right? You can make money on buying something, but you can make money on shorting something, which is basically a reverse trade, so to speak, it's in very simple terms. So it's recession proof. So it's great that you don't have to care about how the economy is going to do and like it's doing, because you can make money on both.
This is a very useful skill then.
It's a very useful skill, exactly. Where you can survive during times of recessions or even depressions, who knows, right?
So if you look at right now, you trade Forex, futures, stocks. You still trade is there anything else that you trade that?
No, those
are the main ones.
These are also the asset classes, right? I mean,
yes,
they are not, option is not an asset class, it's just a derivative, like exactly. So and crypto can be these days also considered as an asset class. I'm not actively trading crypto.
Why not?
I'm old school. I never really needed crypto to make money, and I just stick to my guns. So I feel like when it comes to crypto, and I might gain a little bit of hate when I say that, but that crypto, especially, there's the entry barrier is even lower. Yes. And especially with these altcoins and stuff, like whatever they are.
That's because even if you apply these fundamental principles to it, bad actors can influence something more than, so you're trying to eliminate all the variables.
I'm trying to eliminate, exactly, and it attracts a lot of people who, with the wrong mindset, who just wants to make quick money, who buy like one shitcoin and hope for like the 100x that solves all their problems that accumulated throughout their lives. Yeah. It attracts a lot of these people. So if you want to trade Bitcoin and Ethereum like professionally, that's perfect. But everything else I find a little bit.
Yeah, because then you can't apply the same patterns.
You cannot apply the same patterns that I'm using, exactly.
So when you think about going into 2025 and 2026, like what is market outlook for some of the things that you do focus on? So Forex, futures, and stocks.
Wow. So this is also like a topic we could fill a whole podcast with, to be honest. And what I'm doing is always, and people find it on my YouTube channel. I have my YouTube channel now since roughly 2.5 years.
It's going very well.
And 150,000 subscribers, doing really well. And I'm sharing a lot of free value there. And in the beginning of the year, and like usually mid-year, or if there's some important events or anything happening in the market, I do some market outlooks. In the beginning of the year, I always do like some stock market outlooks, like for the equity indices, for the Dow Jones, for the whole US stock market, basically. And I have to say, these, and people can watch that, these are online on my YouTube channel, fully transparent. These outlooks are pretty accurate that I make for always the year ahead. And so because it's most likely the viewers are US based, your viewers, right? So they are maybe interested about kind of a stock market outlook, right?
Of course. I think everybody is.
Everybody is. For now, it's quite interesting because there's something called, and let me elaborate a little bit on that, right?
Yeah, for sure.
There's something called president election cycle seasonality. These are market cycles. So the US president is being elected every 4 years. So this market cycle, every year is a separate market cycle. So you have election year cycle, You have after the election year cycle, you have the post-election year cycle. We are right now in the post-election year cycle. Then you have the midterm cycle, and then you have the pre-election cycle where the whole thing starts again, and then you have again the whole 4-year market cycle starts again. And the stock market behaves quite interestingly for whatever reason. We don't know the reason, but it does, statistically proven, behaves very accurately based on these 4 cycles. And you can prove this because the Dow Jones exists since 130 years. And you look at these single year cycles and you accumulate them, and you get like a very nice, it's called seasonality. That's why it's called election cycle seasonality. You get like a pretty, throughout the years, throughout the quarters of these cycles, you get a very accurate trend how the market is behaving. It's super interesting, and it works very, very well. So we are, and that's why in beginning of 2025, it's we are right now in the post-election cycle. So post-election cycles, they do very, very well. So on average, post-election cycles, they have a 9 to, don't quote me on the exact return, but I have them on my mobile, but on average, I think 9 to 10% return on post-election.
Very good.
It's very good, exactly. It's actually the second best cycle of them all. The best one is pre-election cycle, I think. Again, I have the exact numbers on my phone, but don't quote me on that. It's also not so important right now. What is important is that post-election cycles are always super, super strong. And they're always ending up, well, you're ending up, if you bought in the beginning of the year, one of the indices, whether it's the S&P, the Dow, or the NASDAQ, you're ending up with a positive return, with a big positive return. And I made these predictions, in the beginning of the year, and then give like these outlooks, and then I'm always like so surprised by all these crash prophets who are saying, oh, this year the market is, going down, and we are like seeing another recession, and it's like Armageddon is in front of the door.
Every year it's like that.
Every year is like that. And you have like famous people saying that, like people who are kind of quote unquote credible when it comes to the financial market.
What's going on? They're just not thinking, or they just...
I'm not sure if I'm not sure if they do it if they do it for clicks, or whether they're doing it for, they really don't know, or they're doing it for, I don't know, I really don't know. Or maybe they just really have no idea what's going on and what tools you can use to anticipate the market. So, and there's something called the end of the Q4, the end of the year rally in post-election cycles, and it's super strong. And if you look at the NASDAQ, for instance, so it's mid-October, if you buy the NASDAQ 1st of November, until end of December in post-election cycle years, out of the 6 post-election cycle years, the NASDAQ always gained at least 6.84% or so, roughly 7% gain. If you just bought the NASDAQ in November, 1st of November, held the NASDAQ until end of December, on average in post-election cycle years, in the past 6 post-election cycle years, you made on average roughly 7% gain, and you never lost. So it's like statistically proven that, hey, if you buy the NASDAQ in post-election cycle years in this period of time, it's very likely, it's high probability that you can make money, right? And this is how I look at the markets, in this case, in equity indices all the time.
How many more cycles are there like that? Across every,
there's a lot of stuff, exactly. But
so you just have these cycles that and then
for equity indices, the cycles are really, really important, because the president election impacts the markets so much. And by the way, what is also statistically proven, that it doesn't matter whether it's like a Democrat sitting as a president or whether it's a Republican, the markets still move the same way, right? So because people are this is always funny if you watch it, like they're like in the media outlets, they're questioning, what happens if Trump becomes president? What happens if X becomes president? Like, how does this influence the market? It doesn't. The market moves because of these election cycle seasonality, because of these market cycles, regardless whether it's Democrats or Republicans. And this is statistically proven. This is really, really interesting. Plus, I could go even deeper down that rabbit hole, and let me do this for 5 minutes because it's super interesting. There's something called the decennial patterns. And the decennial patterns, this was researched by a guy called Edgar Lawrence Smith. He was a trader. He was born in, also you don't quote me on the dates, I think 1881, and died in 1971. So he was very, very old. And nobody knows this guy, Edgar Lawrence Smith. But Warren Buffett once said, to quote Warren Buffett, Edgar Lawrence Smith is one of the best traders he has ever witnessed. So why did Warren Buffett say that? So Warren Buffett looked at the Dow Jones performance since start of the Dow Jones 130 years back. And he checked the Dow Jones performance in every single year. So years ending with 0, years ending with 1, years ending with 2, years ending with 3, years ending with 5, 6, 7, 8, 9, 0, and looking at every century. And then he was looking, hey, can I make an assumption how the market is behaving based on the year ending with 5 or years ending with 3? Is there any kind of statistical evidence that a market, that the stock market with the year ending with 5, 4, 3, 2, 1, 0 is moving in a certain way? So he died 1970 something, so he couldn't continue his study, but there are people who continued the study, and we as a team, I'm also continuing doing his study because the finding is crazy. You have to imagine that years ending with 5, we are now in 2025, right? So this is called the decennial pattern overall. So we are now in the year ending with 5, so 2025, 2015, 1995, 1985, and so on. So all the years ending with 5. If you had just bought the Dow Jones, or like any of the indices, but in this case, the study is done on the Dow Jones because of the 130 years of existence. If you just had bought the Dow Jones in the years ending with 5, out of 14 years ending with 5, you would have made 13 gains and only 1 loss, and that loss would have been like almost a break-even trade, 0.1% out. Yeah, and overall, a cumulative profit of roughly 300%. That's why the years ending with 5, Edgar Lawrence Smith considered or called it the phenomenal 5. So years ending with 5s are always exceptionally strong. So to combine now presidential election cycle, which is we are in post-election cycle, it's very strong, plus decennial pattern, we're in the year ending with 5, so it's a phenomenal 5. That combined, in the beginning of the year, I was like, whoever is not buying stocks is stupid.
Yeah.
I made this video out, I made these outlooks twice. I had 2 2025 outlooks on my YouTube channel, fully transparent. I said, guys, it's time to buy. We are in decennial pattern, years ending with 5. We are in post-election cycle. Regardless of what you hear, regardless of the chit-chatter, whether there's war or not war, like whatever Trump is saying, the market is going to be bullish as hell because of these 2 statistical reasons. It's crazy. It's really insane, and people don't know about that stuff, or maybe they know and they don't want to publicly. But I'm publicly, and with all transparency, I'm like putting it out, and people should see that because it's so important for people, like for investing purpose. It's tremendously important.
I agree. Most people don't know that. Why don't they put it out? I don't know. I feel like most people make the incorrect assumption that, again, like world events impact markets more than these decade-long patterns.
But it's interesting because throughout the past 100 years, you have wars, you had wars, you have catastrophes, you have like external events that you cannot influence. You have so many things happening, but the market is still behaving in the same rhythm, statistically proven.
There's no one understands why.
And nobody cares. I mean, you don't have to care. And it's so good about trading. I don't know why this is the case. Are there deep forces like or like we just don't know, and I don't care. I just know, hey, and this is very important, like from a mindset point of view as a trader, like to really, okay, does this information here can make me money objectively? Yes or no? Can this add to the probability of my trade? Yes or no? If there's a no, exclude it from your trading strategy. If it's yes, then perfect.
Because you have to be careful. Like now when you have decades of data, obviously there's no bias involved. But if you have a short-term amount of data, like a short, like if you look over 10 years and you don't have like historical examples, then you could make mistakes based on some sort of biases that you have. But not if you have like 10, 20, 30, 40, 50 years of data.
It's enough. It's enough statistical evidence to make like, to get into, to become fundamentally biased, meaning, am I bullish this year, this quarter, this week, or am I bearish this month, this year, this quarter, or am I neutral? And if I'm neutral, I don't have any kind of statistical edge, so I'm staying away from the market.
And when you have, so these are obviously multi-decade signals that you can pay attention to. Are there similar types of cycles on like a shorter term, on like a weekly basis that you look?
Oh yeah, 100%. So on the Nasdaq, I also don't know the dates like from top of my head. I just know roughly. So yeah,
we'll forgive you for not knowing every single date. It's okay. We understand where the information's so good. Forget the dates.
Yeah, I want to be like always 100% accurate, and you know when you're like everything is recorded. So
I know, but
that's why I say don't quote me for the exact dates.
Give him some grace on the dates.
So
just use his information to make money.
Next year, 2026, we're in midterm election cycle. And by the way, this is the worst of all cycles. This is a really bad cycle. And so I wouldn't expect massive gains next year, not at all. And by the way, I'm not a crash prophet. I always say the markets are bullish based on my all like the videos that I made. But next year, it's the first year where I say, guys, pay attention. It could be a little bit shaky because we're in midterm election cycle, and these are usually weak. They're like, there's almost no gain, no percentage return on midterm cycles in midterm years. And especially the Nasdaq, if you look at, and when you, because you said like, are there certain weeks? Yes, so mid of January into February, I don't know, it is like a 2-week, 3-week period. Again, don't quote me on the dates. There's literally, if you just trade the Nasdaq, if you just bought the Nasdaq, you would have always lost money. Actually, this is a time where usually I would not recommend shorting indices, like selling to enter, making money on the downside. So, but in this case, it's like a period where it's like from mid-January to like into February. It's a few weeks where the Nasdaq is actually losing on average in these midterm years, also roughly 5 to 6%. So big drawdown. So look to exit or like a short Nasdaq like mid January to like early February, because this is usually where the Nasdaq is super weak, and this is 2026 because it's midterm.
Indeed is a success story partner. Now, if you're hiring, Indeed is all you need. Let me give you an example. If I needed to hire a new editor for this show, I'd go to Indeed and be super specific. Not just, can you edit audio? I'd say I need someone who's edited a conversational podcast for at least 3 years, gets our style, and knows our software. Someone who's done this before. And here's the thing with Indeed sponsored jobs. I'd get people who fit that description. I'm not digging through resumes from people who've edited one YouTube video. I'm getting actual podcast editors who know what they're doing. People who've worked on shows like ours and can prove it. That's what makes a difference. You get people who actually are what you're looking for. According to Indeed data, sponsored jobs posted directly on Indeed are 90% more likely to report a hire than non-sponsored jobs. And people are finding quality hires right now. In the minute that I've been speaking to you, companies like yours have made 27 hires on Indeed, according to Indeed data worldwide. Spend more time interviewing candidates who check all the boxes, less stress, less time, and more results now with Indeed sponsored jobs. And listeners of this show will get a $75 sponsored job credit to help you get your job the premium status it deserves at Indeed.com/Clary. Just go to Indeed.com/Clary right now and support our show by saying you heard about Indeed on this podcast. Indeed.com/Clary. Terms and conditions apply. Hiring, do it the right way with Indeed.
HubSpot is a success story partner. Now, look, if you're in marketing right now, or if you're an entrepreneur who's hired marketers, or if you're a founder who leads a whole marketing team, you know the drill. You are creating content for 12 different channels. You're launching campaigns. You're scoring leads. You're analyzing all the data. And somewhere in there, you're actually supposed to do great marketing.
and it's exhausting and you're spread too thin. But this is what actually works for marketers to give you your life and your time back. HubSpot's Marketing Hub, HubSpot's Content Hub, combined with their new AI called Breeze. Now, what this actually does is basically everything that you shouldn't have to do yourself. It remixes your content instantly, so you're not starting from scratch every single time. It handles lead scoring, so you know exactly who to focus on, which customers will probably convert, and it pulls all your analytics and your data and KPIs into one place instead of having them scattered across 15 different tabs and tools. Plus, the AI agents that HubSpot builds for you can automate the repetitive stuff that's eating away your day. Bottom line, you get better results faster without burning out. See, with HubSpot, everything's connected in one platform instead of duct taped together. So if you're tired of being spread too thin, check out HubSpot.com/marketers to see how this actually works.
Very smart. So listen, this is how now I start to see how the strategy comes together. So when you have these historical signals that you look at, plus you layer in risk aversion and all the principles that you abide by, this is how you end up being successful as a trader.
In a simple way. You exactly. Yeah, you layer in all like statistical evidence that this was just an example. Like looking for equity indices, I like to look at decennial patterns and election cycle seasonality. This is part of the strategy when I trade equity indices, right? So I layer in all the statistical evidence, the more the better, right? So because then, since I have more evidence, I have more probability. Because trading is all about probability, right? Trading is all about probability. But if you have all these layers of evidence, you have these data points, you have a lot of evidence, meaning you can add more probability in your favor.
What do you think about like algorithm trading? Like when people are trying to layer AI into trading and whatnot.
Yeah.
And the reason why, I'll tell you why I ask, obviously because it's topical now, and I have friends that have lost a lot of money trusting somebody who had AI that was supposed to trade for them. But I have a lot of smart people that are trying to figure it out in my circle of friends that are trying to figure out, okay, how do we leverage AI to make perfect trades all the time? Because of course, AI is just aggregating huge amounts of data. And that's really what AI is.
And it's basically using a lot of data, right, to come to a conclusion. But there will be always, so for that's like kind of the mindset of finding a shortcut, like finding that magic program, bot, AI, whatever, however you want to call it, but that magic button that can generate profits without you having skill, that's a fairy tale. I have to say it how it is. Like for retail traders out there, for us, retail traders are individual traders like you and me, right? We are retail traders. There will never be any kind of magic button that you don't need really, like where you don't require skill to apply some strategy or like years of knowledge and skill to make money. That magic button doesn't exist and will not exist, because if that magic button, if somebody is like super, super smart and develops that magic button, he will not offer it for like $50 on like any kind of social media platform to sell. Like,
wasn't this magic button like Renaissance Technologies to a degree? Renaissance Technology is one of the most successful in the world, right, at trading. I don't even think in their main fund, I don't even think they allow people anymore. But I think his returns were just incredible.
Yeah, but there's nobody out there who can develop that a single individual that is in our capabilities develops that magic button or selling that magic button, who can make profits without you needing to do anything, right? It doesn't. So obviously you have firms and big firms like BlackRock, Vanguard and stuff, like they use AI, but they're way smarter than we they have way more power, influence, resources than we do, and this is a different story. But we talk about us single individuals want to survive in the market, trade the markets. For us, no way, right? This is a fairy tale.
Just a couple more things that I thought were interesting from sort of the philosophy and the mindset of a trader, which I think will be useful just for the audience, and especially if somebody's like looking to get into trading for the first time. So you mentioned the set and forget and get a life philosophy. Where did that come from? Why was that important to you? Why would you recommend? Because we've touched on you don't want to create a full-time job. How is that important for you? And what would you recommend other people think about when they start trading?
That's exactly the reason, because when I went into trading, because usually people go into trading for deeper reasons, not only necessarily about the money. So if you ask people, why do you want to trade? Yes, their first thought is maybe money, but usually there are deeper reasons, right? I firmly believe that people go into trading because they have some pain, any kind of pain. Because it's not an easy way to make money, right? But it can provide you with a lot of things outside money as well. And for me, the pain was I hated my job so much.
Were you in finance before?
No, I was actually when I was in the corporate world, I was in the automotive business.
Oh, that's so
like
funny.
in marketing, sales.
So complete 180 from...
Exactly, complete 180. That's why I say it's a skill that can be learned by anybody, right? It's like you start from the scratch. It's like playing the piano in a way. Like you don't need... This is also a nice myth that people think sometimes, hey, you have a talent in trading? No, I don't have any. There's no such thing as talented trader, because it's a skill, right? It's not like you're an NBA player that, yes, you need to have like a certain size to be, because you're talented. But in trading, it's a skill that can be literally learned by anybody. So I went, and my pain was, and then if people think about it, why they want to, like if the viewers are watching and they think about, I would like to go into trading, think about really why you want to go into trading. And most probably you find deeper reasons than just money. For me, it was like I hated my job so much. I hated my 9-to-5 grind. I was waking up in the morning thinking, I don't want to do this for the rest of my life. I cannot do. I don't feel any passion. I don't feel any purpose. Nothing like that, right? For me, it was just my corporate job was just there to make money and to make a living.
And it just was not fulfilling at all.
Not at all, right? And I think a lot of people can relate to that. That's what I realized throughout the years. So I found the passion, like real passion, in trading. And I hope you realized that during the podcast we could go for hours. and so I found the real passion in trading, and also into educating people, and just talk about trading, because trading in general is just a lonely business. You sit in front of the screen and you don't have anybody to share your passion with. So that's a problem right by itself, but that's why you have
that's a entrepreneurship problem too in general. Usually when you're building anything, it is very lonely.
Very lonely.
When you put yourself out there, when you do something that no one's ever done before, when it is very lonely.
And that's why I love podcasts so much, because you can like really let out everything, right? There's no filter. You can just talk about trading. That's why I love it so much. So that was my reason. So that's why I was like, hey, again, we always touch on that swing trading perspective, so swing trading / set and forget, and get a live trading approach, because that's what swing trading necessarily should provide. That you have a life, that you don't replace one 9-to-5 job with another 9-to-5 job. Again, this can happen. So once you're like a proficient in that business, once you're like really skilled, then you have that kind of, then you can have that life, but you first have to get to that point. I always want to stress that you don't have that from day one, right? It's impossible, because you have to, again, I want to really like emphasize in that and make people aware that there's a learning curve. People have to get started. It takes a lot of discipline. It takes a lot of time as well to also, it takes sometimes sacrifice, right? Because you're learning a new skill. So people who are really busy, if you're the single mom who have 2 kids and a full-time job, you can still learn how to trade, but most probably you have to sacrifice on something. Back in the days when I started to learn, I had the corporate job and stuff. I sacrificed gym. I love to go to the gym and do like sports. Like I love doing my sports and stuff. So I sacrificed the gym a little bit. I sacrificed also my social life, and I was really like focusing on learning the skill how to trade. So at this time I had really like my job, my corporate job, and learning how to trade. So sacrifice, and I have to say, so there's always, when you learn something new, if you start a business, whatever it is, if you go into entrepreneurship, there's sacrifice involved as well. Otherwise, it doesn't work. Yeah.
I'm curious, because we've kind of already established that the reason why a lot of people screw up in trading is because of either lack of skill or making poor decisions. Poor decision making because you're a human.
Poor decisions because you lack of skill. And sometimes, and this is actually important to stress, people usually they stress that they blame also their psychology but the psychology is, they have quote unquote bad psychology because they're not skilled, not the other way around. Once you are skilled, you kind of eliminate a lot of the psychology factors. It's never the other way around. It's super important, and people don't understand that, because again, people say, oh, because of my emotions, because I was greedy, because of this and that, they blame the emotions because they lost money. Yeah, no, you lost money because you're just not skilled. Because if you were skilled, emotional factors would not play a big role.
Were there any things that outside of like you hated your job, but what made you use trading as the way to get to freedom, fulfillment, money, a life that you actually enjoyed?
I think the passion that I developed through trading, it was crazy.
Passion follows skill. That's very important. You have to develop the skill and you'll find passion for it.
Yes. You're curious.
Yeah.
First, you're curious about the topic, something, right? And then you get into it. And for me, trading, because I have just a normal, like most people, normal business university degree. I went through school my life until I was like my mid-20s. Like I went through the whole school Debunked program, very traditionally. And, you learn so much in school that you can never really apply in real life.
Very much.
It's like so many theory models over and over again that you realize at some point in time, okay, I learned that, so how do I apply that to make money? Right? It's like you learn something that you want to apply to make money. Once then, I went into trading and I realized, shit, like I really remember that when I went into trading and I realized, shit, for the first time in my life, I'm learning a skill, and immediately this skill I can apply to make actual money in that same moment, in a way, quote unquote. It was mind-boggling. It was like crazy to me that I learn a skill that I can apply to make money immediately. Very, and this like
relatively quickly.
In the sense of I can see that this might work out. That's what I mean. Like, of course, it's fail and error and it takes like practice and all this kind of stuff, but you're literally learning the skill that you can apply immediately in the markets and potentially see like an outcome. Whereas everything you learn in school, it's like theory or theory.
Listen, I went to school I was supposed to be a lawyer at one point in my life, and then I went to school for pre-law, and I remember learning history and theory and basically nothing that I use right now at all. like basically nothing.
We're sitting here and having a podcast, right?
Yeah, right. How has your relationship with money changed since you are now a very successful trader, and how has it had to have changed? You touched on this briefly, but explain how it's changed for you and just one more time, I think it's very important for people to, I loved that whole idea of your relationship with money and how that ties into who you are as a trader, and it has to be positioned in the proper sequence.
I have to say, money, again, was never the primary reason why I went into trading. I always had because, I had a job in Dubai, tax-free income, I had good money, working for some automotive brands, making really good income. Money, when I went into trading, literally, yes, obviously money was like, okay, I want to make money with trading, but it was never the primary reason why I went into trading. So I had really the deeper reasons, like I hated my job and stuff like that. I wanted to have more purpose, fulfillment in life. I wanted to wake up excited. Like I had these intrinsic feelings, values that I want to accomplish this in life. And I thought, okay, money will just follow then, just by default in a way, So when it comes to trading in particular, though, obviously you realize once you start trading and you have money in the financial market on a daily basis in a way, right? That you have to slowly get used to bigger numbers in the market, that your risk tolerance has to increase slowly. It's like if you have never, like for me, in the very, very beginning, if you had never $1,000 risk in the markets, and all of a sudden you have $1,000 risk in the market, this does something to you, right? You make then, because you're also not yet fully skilled, you make poor decisions based on the flashy number that you see on the screen. That's just, again, you're human, it's human psychology. There's no way around it, right? Some people and then it's just about the number on the screen, the flashy number that varies from person to person. Right? How risk averse are you? Right? Is $1,000 for you like pocket money, or is like $1,000 like your monthly income? Right? So everybody has to kind of define their risk tolerance in the beginning themselves, and then slowly increase it based on how comfortable you feel based on these numbers. I call that milestone planning in trading, that you increase your risk tolerance slowly, the more and you have to get more comfortable to these big numbers. Now I'm looking back and laughing about these numbers, right? But that's how you slowly increase your risk tolerance. And I think this is how my relationship to money changed. The more experience I have, the more I get detached from these numbers and just follow the strategy. But in the beginning, you're just following the green and red, money.
And 50,000 is a lot scarier, even though the patterns still apply. But for most people, $50,000 in a brokerage account or in a trading account is much scarier than $1,000, and it's much less scary than $1 million. But again, if you have the right skills, then $1 million should follow the same pattern as 50,000, should follow the same pattern as 1,000.
You get it exactly. That's the point, right? But then the question is, are you capable mentally, emotionally to manage $1 million versus $50,000? If you have never managed $50,000, then you're also not. Then you should never manage $1 million, right? And that's why you have to slowly climb that ladder. And that's what I call milestone planning. You have these milestones, and if you feel comfortable with $50,000, or that's the money in the account, but let's assume if you're comfortable risking $1,000 per trade, well, then you move up the ladder. And if you're saying now you're trading $2,000 risk per trade, and if you feel like you're making poor decisions, and you see maybe this based on the data, on the results, that because your execution is exactly the same, is supposed to be exactly the same than in the previous milestone, but now you see you're making poor decisions because maybe of the amount exactly, then you have to go back a milestone
until you're comfortable.
Until you're comfortable again, and maybe do smaller jumps.
Okay, so to set expectations, if somebody is starting to trade, how much time should they give themselves before, and I know you're going to say you have to define what real money is, but I was going to say before they make real money, meaning is it 2 years? Is it 5 years? Is it 6 years? And what is a healthy return? So tell me what a healthy return, not investment advice, but just so that you can level set versus what they're seeing online in terms of how long they should be doing it and how much they should be making.
Yeah. That's with what do you want me to start with? A healthy return? Because I need to elaborate a little bit on that.
Please, yeah.
All right. So when it comes to trading, percentage return, I said in the very beginning of the podcast, 1 to 5% is realistic return. But since we're going a little bit deeper into the rabbit hole, I have to say percentage return is not the real approach when it comes to trading. So we measure our success and our profitability based on risk to reward proposition. Because at the end of the day, let me explain this quickly, just make a simple example. Yeah. Now, whether I'm going to tell you I make now 50% a year or 20% a year or 10% a year, you would expect, okay, the person who makes more return is just by default the better trader. It's not necessarily true, because he might have over-leveraged himself. He might have taken too much risk, and we don't know this based on just percentage return. So saying that if a trader tells me or brags, I made 50% return this year, it's already a red flag, because it doesn't mean anything. He could have taken 70% risk per trade. So it's like a bad risk to reward proposition. So maybe it was just luck that he made the 50%.
And again, the game is to stay in the game.
Exactly, forever. Exactly, because you want to trade for the rest of your life. So that's why as a trader, as a professional trader, you measure your performance not based on percentage. You can do this then at the end, but it's more based on risk to reward proposition. Meaning for every dollar you risk, you try to make $2. So it means 1 R, 1 risk, versus 2 reward, 2 R's. And a healthy monthly return is 2 rewards, 2 R's per month on average. Meaning over a whole year, 2 times 12 months, so 20 to 24 R's return per year is a realistic goal to achieve. 20 to 24 R's per year on average, 2 R's per month. So it's meaning if today, and this is then, you have then also a fixed dollar risk. It's called a fixed dollar risk approach, where your monetary risk per trade is always the same. Meaning, let's assume over a whole year, I risk, we make a very simple example, $1,000, all right, per trade. So meaning, I risk now today $1,000, and I have a return of 2 Rs per month on average as my goal. So I make $2,000 per month based on $1,000 risk per trade.
That's a great ratio that can be sustained forever. You know.
So exact 100%, and that's not rocket science. I'm not. It's really 1 to 2 Rs per month on average is very reasonable, and something that everybody at some point in time, if they are skilled, can achieve over a very long period of time. Obviously, you have like in any other business, you have like kind of break-even month, you have more like negative month, then you have like a really good month that is like you have overachieved your targets, you have 4 or 5 Rs. But again, 20 to 24 Rs per year on average is very reasonable. So if your risk tolerance, if your risk level right now is $1,000 per trade, you can expect at the end of the year $20,000 to $24,000 per annum.
And if people aren't even speaking like that, then they're just telling you numbers that could have been lucky, could have been fake, could have been
bad risk management. You otherwise these numbers don't tell you anything exactly, and most people do that. So it's like for professionals, it's like already very red flag. If somebody says I made X percentage amount per year on a leveraged market, it's like, what does this even mean? Now, this doesn't tell me anything, really. Whether you're good or bad, how much risk per trade you took, like, it doesn't tell me anything. That's why when somebody asks this question, I always have to elaborate a little bit more, that it's not necessarily measured on percentage performance, because it really doesn't mean anything. It's more like on risk to reward proposition.
Again, it's switching the mindset from short-term to long-term.
Exactly.
And for somebody who puts in reasonable effort, 3, 4, 5 years before they should think about this as something that's their actual work?
No, I think so. Again, it would be not professionally for me to put like a real number behind it. Again, that's a red flag when people say you can learn trading in X amount of time.
I feel like when people say you can learn trading in X amount of time, they are not saying 5 years. They're usually saying 3 months. That's
learn my strategy in 7 days and become a profitable professional trader, right? That's like usually like take my weekend course, my weekend seminar, and become a trader. That's the problem, right? Obviously, it's super unrealistic. And then we have to differentiate. It's trading is a very individual journey. Are you, again, the single mom with 2 kids and a full-time job and can barely, spare some time for trading? Or are you the bored student who's like has all the time in the world and can really like study 10 hours a day on
But when you start to hit those ratios, when you have predictable ratios, that's when you can start to think this could be something that's full-time.
Yes, exactly.
Even if you don't have prop money, realistically, if you have those ratios and you have the skill set and you start to scale.
But that just takes much longer. Yeah. And if you lack in capital, it just takes much longer.
No, I mean, if you hit those ratios before you actually get prop money, then that means that you probably would pass the test to allow you to.
Yeah, 100%. Yeah, of course. Then it should not be difficult to pass these tests. Exactly. Yeah. That's how I experienced it, right? For me, it was like, okay, wow. At first, I was like, wow, there are tests. Let me do it. And it was like, wow, that's actually was quite easy, right?
It's actually such a beautiful idea that if you can hit these ratios with $500 or $1,000, then in theory, you are set for the rest of your life.
In theory, yes. 100% in theory,
That's
yes.
a beautiful idea. Like, yes, I'm sure you have to manage yourself, your emotions, but it's, if I make $500 as an entrepreneur, there's no guarantee I can make $5 million as an entrepreneur. There's scaling issues, there's cost of goods sold, there's a hiring that has to happen.
There's so many other variables involved.
So many other variables.
Trading, you don't have these variables. That's why it's like the most beautiful side hustle in the world. That's why yeah. So when it comes to time duration, again, I don't want to put a fixed time, but what we see based on my experience, that people who really put, let's say, 12 months of really hardcore I don't want to say hardcore dedication, but dedication, so they can study on a daily basis, an hour, 2 hours, then on a week, because sometimes during the week they're busy, but they can put more time, effort during the weekend. So I would say 12 months is a reasonable time to then see the first, consistency in your approach. But again, it's an individual journey. It really depends on how much time you can put into it, and it still takes time, and people have to go into that knowing it takes time. There's no overnight success. And it looks easy, yes, but it's definitely not easy. There's no such thing as easy money, right?
There's no such thing as easy money. But my favorite idea is that in life, you only have to figure it out once. You only have to figure out how to make money once. You only have to figure out how to build a business once. You only have to figure out how to trade successfully. And once you figure it out once, your life is set. Where can people reach out to you? Where can they follow you? YouTube, socials?
Yeah, usually I tell people just go on my YouTube channel, Bernd Skorupinski, my full name. They can watch my videos. I share a lot of free value. Again, like all these, I think, stock market, election cycle, predictions, anticipation of where the market is heading. A lot of value for the people. I put them out all for free. And yeah, just you find me on my YouTube channel, Instagram, and you can go from there.
Okay, we'll put that all in the show notes. Last questions. You now you have a whole bunch of like students, audience, whatever you want to call them, that consume all your content. What would be the biggest thing that they screw up that stops them from being successful?
They jump into the market too quickly. They jump into the market too quickly. They use their own money. They risk too much, and all of a sudden it backfires, and they lose it, right? They think they know it, but they don't know all, right? The saying, you don't know what you don't know, that is really exists, especially when it comes to trading. Don't have an ego as well, because usually so the majority of the content that consumes the people that consumes my content are, because of trading, are male, right? They have a big ego. They know everything better. We know everything better, right? Female traders are the better traders, actually, because they are like very like, they first want to learn everything properly, to the book, like to the point, and then they execute. But men, they execute first and then they learn because they realize, maybe I should.
They're gonna have to learn eventually, anyways. That's funny.
So it's funny. No, really, that's my experience. But so yeah, don't have an ego in trading. You cannot. When it comes to the financial market, everybody has like preconceived thoughts about the market, right? Because we are exposed to the market on a daily basis. Don't have an ego. Learn first before you get into the market. And this is usually why people then they have bad experience, because they lose money quickly and they lose a lot of money, and then they're hesitant to go back, but they just made these mistakes in the beginning.
If you were going to go back and tell your 20-year-old self one piece of advice after everything you've learned in your life,
just do everything the way you. I'm quite. Nobody's, I think, fully happy with their life, right? Everything, there's always space for improvement, and there's always things we want to achieve, and so on and so forth. But I think if you have told my 20-year-old me, who was kind of lost, really never knew what like I wanted to be in life and what I can accomplish, if you had told me that I would be here at this place right now, I would have signed the paper and say, yeah, take me there. So that's why I would say, I would tell my 20-year-old that made a lot of mistakes, learned a lot of lessons. Do these mistakes, learn these lessons, because they make you the person that you are today. And I'm quite, with all the flaws that I have, it is what it is. I'm quite satisfied where I am today.